Good afternoon. I'm Bill Wilson, CEO of Townsquare Media. Appreciate you joining us today. I am going to go through about 10 slides in advance of a Q&A that Michael will quarterback. So appreciate you taking the time for me to allow you to update on the Townsquare story. Great things are happening. As you may know, we pre-announced Q4 results a couple weeks ago, and our revenue was slightly down about -4%, but we were very proud that our EBITDA was up year over year, plus 10%. I think one of the silver linings, really, the pandemic served to accelerate our transformation to a digital company, which hopefully you'll get a greater understanding and appreciation of over the next 40 minutes. 44% of our revenue and profit is digital revenue, which we'll talk about where that started and where it is today and where most importantly it's going. I think you'll find that we are very unique and differentiated in our business model, as well as our approach to local media. So let me jump in and give you a start on just some key stats and an intro to Townsquare. If you're not familiar with us, we are a local media and digital marketing services company. One of our core differentiators is that we focus on markets outside of the top 50 cities. So our core focus and discipline is markets outside of the top 50 cities. Over the last 10 plus years, we've been transforming a traditional radio company into a digital company. And as I just noted, 44% of our revenue in 2020 was digital revenue. A hidden gem in the company is Townsquare Interactive, which I'll speak about in more depth in a few slides. It's a monthly recurring revenue stream for SMBs to not only have a web presence, but also importantly to drive incremental customers, not only to their websites and apps, but to their business. Today, it's a $70 million subscription business at a 30% margin. So roughly in 2020, we did about $21 million in profit. And probably the most important point for Townsquare Interactive is the addressable market, which I'll speak to in a little while. We also have a digital programmatic advertising arm of the company called Ignite. It is the fastest growing segment of our company, fastest growing solution of our company, highly differentiated in our size market. So I'll speak in depth about that as well. And then obviously we were birthed, our DNA as a broadcast company, and we're very proud of starting as a broadcast company and morphing into a digital company. But worth noting that our broadcast business has been quite stable pre-COVID, and we expect to get back to pre-COVID levels post-COVID. But we were very stable in terms of revenue and profit, as well as audience. And probably as you'll see on this slide, I think it demonstrates our transformation as a company. We have 58 million people coming to our radio station websites and websites across our company, and we have 11 million people who listen to our AM/FM broadcasts. Therefore, you could see we have 5 times the digital audience than our radio audience. So I think you'll see where that started and where we are today, and hopefully you'll agree it's been quite a transformation for Townsquare over the last decade. From a reporting standpoint, as a public company, we have 3 financial segments with really 5 core operating components. So let me start with advertising because it is the largest component. Our advertising is comprised of digital advertising and broadcast advertising. As you can see, it's roughly just under $300 million in 2020 at roughly a 23% operating margin. You'll see on the left-hand side our stats on radio. As I mentioned earlier, extremely stable in terms of audience, extremely stable in terms of revenue and profit. Very differentiated, in my view, very different business being in radio outside of the top 50 markets, which I know we'll talk about with Michael later. These markets truly are underserved for news and information with the retreatment of newspapers as well as investment in these size markets. And on average, this is probably another key differentiator versus big city radios. On average, just by our AM/FM broadcast, we reach 50% of the adult population in our 67 markets on average. So in essence, we're reaching 1 in 2 people in the markets that we operate in just from our radio broadcast, even before we add on our digital audience. So a real differentiator when we sit down with a client and talk about our radio solutions. So moving from our broadcast radio over to the right-hand side of the screen, our owned and operated digital advertising. So digital advertising is comprised of 2 components, what we call AMPed and Ignite. So to start, AMPed is our owned and operated digital brands and technology. Each of our radio brands has a standalone website along with a standalone mobile app. And then we have about 20 non-radio brands that we have. So all in, as I mentioned earlier, we have 58 million in total audience coming to our websites each and every month. And this is a great advertising business for us. The other element of digital advertising I noted before is programmatic advertising. We call it Ignite. As you're probably aware, it's the fastest growing advertising in the US. So we have our own in-house demand side platform. It's proprietary technology. We're literally linked up with over 1,000 DSPs. And in essence, think about us as our own local digital agency with a creative agency in-house there. So I'll talk more about that, given that it's the fastest growing part of our company from a revenue and profit standpoint. Moving away from advertising now to our subscription business, which is Townsquare Interactive. As I noted before, this started in 2012, really birthed out of a world-class engineering team that built solutions for our radio broadcasting. We started to provide for SMBs in our markets. We now have 600 people in Charlotte who are focused on Townsquare Interactive, including 200 that are inside sales team doing telephonic sales across the U.S. So almost 60% of our clients now to Townsquare Interactive are actually outside of our radio footprint, but in like-sized markets, which I'll talk about. So again, highly differentiated subscription business, monthly recurring revenue, and at a 30% margin. So as I noted before, a little over 70 million in top line revenue in 2020 and about 21 million in profit. A real hidden gem in our company, which I'll speak at in more length. Live events is the last part of our company. Historically, it was a much bigger part of our company. When I moved, I've been with the company since 2010. Prior to joining, I was the president of AOL Media for 10 years, and prior to that, I was the head of worldwide marketing for BMG and Sony Music. So I joined Townsquare when it started in 2010. I became CEO in 2017. Live events was a much larger part of our company. We had a large carnival company. We had multi-day music festivals. When I moved into this role, I really focused it on our local markets. So pre-COVID and post-COVID, live events will be centered in our local markets, really as a marketing arm to our radio brands, but also a profit center where we're providing on-site activation and a way for clients to be in front of their consumers face-to-face. Obviously, during COVID, we stopped doing events last March. So thankfully, we were able to operate it at a break even in a COVID year. But you could see on a trailing basis, it was $2.5 million at about a 10% margin. In a normal year, that would be a little under 20 million in revenue at about a 20% margin. So that's hopefully a good snapshot of our company overall. Advertising, which is made up of broadcast and digital, digital marketing solutions, which is Townsquare Interactive, which importantly is a subscription business. Not a lot of local media companies have a monthly recurring subscription business, and live events. One of the key differentiators for Townsquare is obviously its digital growth. But before I get to that, I wanted to talk about, a lot of questions throughout this conference today has been, how have you rebounded during COVID? So here you can see, I'm showing you net revenue first, which was down 35% in Q2. That rebounded to 15% in Q3, so down -15. And then at end of the year, call it at -4. So -35, -15, -4. Sequentially improved really each month, but as you can see, each quarter. And that continues into 2021 as we continue to see improvement across all lines, be it broadcast, digital advertising, Townsquare Interactive. The only part that's not active is obviously live events. Townsquare Interactive, again, a hidden gem in our company, actually grew throughout the pandemic. In Q2, you could see we were up 10% in revenue. In Q3, we were up 14% in revenue. In Q4, we were up 16%. So our revenue accelerated throughout the pandemic, and that continues into 2021. And then you can see from an adjusted EBITDA standpoint, Q2 was the low mark, as you would expect, roughly 2 million in Q2, 17.5 in Q3, and we pre-announced the range 27 to 28 in Q4. Really, really proud, as I noted at the top of this, that we grew EBITDA in Q4 2020 over Q4 2019. That was really driven by two components, our digital solutions in the company and political, and those were pretty evenly weighted. So they both contributed to our year-over-year EBITDA performance in Q4 as we entered 2021 with some nice momentum. So as I started to say, one of the core differentiators for our company is digital. It's obviously my background, having been at AOL for 10 years, and really why I joined Townsquare was to transform it from a traditional business to a digital business. I think you'll get a good sense here. Even going back to 2017, just a few years ago, we were 99 million in digital revenue. It comprised only 25% of our total revenue. Last year, even a pandemic year, we were 162 million in digital revenue and 44% of our total revenue. So you can see it's quite a differentiator. Our digital platform, really importantly, our digital technology. We have a world-class engineering team, many of them who I brought over from AOL, is a true differentiator particularly in our size markets, where we're in markets outside of the top 50 cities in the United States. And you can see on the bottom left of the screen just a comparison. Really, nobody else in the broadcast space has greater than 20% digital revenue, and we're sitting well north of 40%. So quite proud of that, and most importantly, from an investor standpoint, quite differentiated from others in local media. So to the point I said before, it's really, really important. I feel like we're in a different digital business and clearly in a different broadcast business, focusing 100% outside of the top 50 cities. It's in a very attractive competitive landscape. There's very limited focus from top 50 market players. Importantly, the communities here, as I mentioned before, newspapers have really retrenched from journalists being local. There's still newspapers in our markets. When I joined the company in 2010, they were almost all 7 days a week printed papers. Now we're at many have actually folded, printed, only gone to digital. Many have gone to 3 days a week. So long way of saying that there's really a desert of coverage here. So we've moved in and filled that void for local content on air and local content online. And that's one of the core differentiators for our company. So much so that Google, as you'll see on the left side of the screen, gave us a grant in 2020 to start non-radio branded news operations. We started them in Tuscaloosa, Alabama, and Portsmouth, New Hampshire. But I think the fact that Google gave us this $260,000 speaks to the fact that they recognize how well we do serve these communities from a content perspective. The last couple of points I'll make is that we reach over 50% of the adult population just from our radio broadcasts, as I mentioned earlier. That's quite different than other radio broadcasters in big cities. Our local sales teams in 67 markets, we have local sales people, feet on the street, long-term relationships. Many of them grew up in those communities. So it's a competitive advantage for us. One of our greatest assets is our local sales team. In addition to that, as I mentioned earlier, we have 200 people in Charlotte that are salespeople that is an inside sales team. And they're calling across the U.S., but in like-sized cities. So populations that less than 1.5 million. And they're today only selling Townsquare Interactive. In the future, they're going to sell Townsquare Ignite and other advertising and solutions to these size businesses. So being outside the top 50 is a real important component of understanding Townsquare. So Townsquare Interactive, as I said earlier, this is really a hidden gem in our company. It's really my job as the CEO to make sure it's no longer hidden and it really unlocks the value overall for our company. It's a recurring monthly subscription business. We're providing all digital marketing solutions for SMBs, websites, traffic to their websites, so search engine optimization, so organic search traffic, reputation management, directory listings. We are updating their websites all the time for them. It's a flat rate fee. So on average, you can see on the right side, ARPU is $300 per month. And for that $300 per month, they have a dedicated customer service rep, and they can literally call as often as they want for any changes to their websites. As I mentioned earlier, it's organically built proprietary technology that this is built on. 70 million in annual subscription revenue, $21 million in profit at a 30% profit margin. Just under 23,000 subscribers. Almost 60% of these subscribers are now outside of our radio footprint. So that inside sales team I mentioned is today selling 70% of our sales for Townsquare Interactive. So based on our client base today is 60% and growing roughly outside of our radio footprint. Incredible team in Charlotte of 600 people, started in 2012 with 3 people. Probably the most important thing, taking a step back, is the addressable market. So I just mentioned we're under 23,000 subscribers. Let me talk about the addressable market for this product. It's literally 9 million SMBs. How do I get to that addressable market? I take cities in the U.S. with population less than 1.5 million. So like Townsquare market, so not in the big cities. Population 1.5 million people or less. I then target businesses with less than 5 million in annual revenue and less than 24 employees. So less than 5 million in annual revenue, less than 24 employees. I then remove certain verticals that we have history with that we don't think fit this product well or churn at a rate that we don't like real estate agents. We see real estate agents come in, put up a shingle, they're in business for 18 months, they're out of, they move on to something else. So we exclude verticals like that. And when you put those filters in place, literally there's 9 million customers that are perfect for this subscription product. And we're only at 23,000 today. So the addressable market, the opportunity for us is huge with Townsquare Interactive. We publicly stated 2 years ago that this would be $100 million in revenue and $30 million in profit at this point now within 2 to 3 years. Back then we said 4 to 5 years. So we are on track to deliver on that commitment that we made a couple of years ago. And this will be over $100 million in revenue on its way to $250 million and beyond based on the addressable market. The last thing I'll say on Townsquare Interactive, because I could talk about this business all day, is if you look at a comparable company like Wix, who they're more of a self-serve platform, they don't have any profit, but if you look at, they actually have a revenue multiple as a publicly traded company at 13 times revenue. So if you applied that multiple to just Townsquare Interactive's revenue base, it would be higher than the complete market cap of Townsquare. So clearly my job is to unlock the value here and make sure people understand it, but really an incredible business for us with Townsquare Interactive. Amped, as I mentioned earlier, is our owned and operated technology and products and brands that we're monetizing from an advertising base. So it's proprietary content management system, proprietary ad stack technology. We have 80 SSPs bidding on this inventory in real time. We have 330 local radio station websites and mobile apps. We have 20 non-radio brands. As I mentioned before, Google gave us a grant just given how well we do online content and driving online audience and monetizing that audience. They asked us to create 2 websites to serve underserved communities for news and information in Tuscaloosa, Roll Tide, Alabama, and Portsmouth, New Hampshire. As 40% of our AM/FM radio listeners, so 40% of the people who listen to our traditional broadcast have actually downloaded our mobile app for that radio station. Pretty incredible stat, and really important because all our mobile apps are integrated into Apple CarPlay and Android Auto. So when you get into a car and you plug your phone into it, because everybody plugs their phone in to get charged, takes over the dashboard, and our stations come up front and center on the dashboard and can be controlled by the steering wheel as well as voice. So 40% of our radio listeners have downloaded the app. A real competitive advantage as we go into the dashboard of cars. 58 million unique visitors coming to our websites each and every month. You can see some of the stats on how they get to us through social and through search. But just to put this in context, when I joined the company in 2010, we had less than 1 million unique visitors coming to our web properties. Today, we have 58 million and growing. So really proud of that. The last thing I'll point out on this slide is we have over 3 billion lifetime views on YouTube, which I just think speaks to the fact that we know how to do content across all platforms, be it TikTok, YouTube, Instagram, websites, apps across the board, really super serving local communities. So important. Everything we do is local, local, local. Ignite, as I mentioned earlier, this is our digital programmatic advertising solution, the fastest growing advertising in the US, as I'm sure you know, and therefore it's also the fastest growing solution in our company in Q4 and as we go into 2021. It's an in-house technology. It's an in-house buying DSP platform. In our size markets where we operate in our 67 radio markets, Townsquare is actually one of the largest trading desks. We're seeing an incredible amount of volume. So we're buying inventory across the internet. This has nothing to do with our owned and operated inventory. The majority of inventory is running across the internet. And we are in essence a digital agency. We're creating the right message for the client. We're developing the creative for the client, and then we're serving that ad across all platforms. You can see on the right side, we're doing everything from OTT to foot traffic to attribution, highly sophisticated. And as I mentioned at the top of this, in our size market, highly differentiated. There'll be somebody who'll put out a shingle and they're getting one demand source, be it Google Display Network, be it Facebook ads, but nobody in our size markets that we've come across has the breadth of inventory and the level of a DSP and trading desk that Townsquare has. And that's why it's literally the fastest growing solution in our company. And we could talk more about this. What it is I go to a client, I say, who is your ideal customer? So we're in Tyler, Texas. Say it's a jewelry store. The jewelry store will say, if it's a female, she's 45 plus, married with a household of $60,000. I'll then target specifically those people and I'll create the ad for the jewelry store. I'll serve that ad. I'll provide in-depth information and insights about how that's performing that can also influence the rest of their marketing. Highly, highly targeted, highly, highly efficient. And it's a real differentiator for our company. A couple more slides before I open it up to Q&A with Michael, which I look forward to. We also have what we call Data Squared. It's our own data management platform. What that is, we collect first-party data on over 15 million people who either come to our apps, who come to our websites, who provide us their email at a live event. Highly differentiated, highly valuable for our sales team because they can sit down with a client and provide incredible insights about our audience, who in our audience is the right customer for them and why. But we've also used Data Squared and our first-party data to actually influence and inform our content strategy over the air as well as online. And don't want to speak a lot about this, but we started this in 2014. We've invested over $10 million. I've been at it for 6 years and really quite a differentiator for us, particularly, again, when you think about our size markets. If we were in New York, LA, Chicago, Miami, I'm sure many people have first-party data. In our size markets, given the level of community penetration we have real in-depth information about so many people in our communities that's valuable for our own business, but really important and valuable for our clients' business. So last thing I'll mention before I turn it over to Michael is, listen, again, we started as radio, so we're really proud of radio. It's a stable business for us, but our growth is all in digital. But it's really heritage to our company, and we're ingrained in the local community. So everything we're doing is local, local, local. Every decision we make is, how is it going to help a local client? How is it going to help a local listener? How is it going to help the local communities? That's the prism to how we make investments, how we make decisions. And that's why I'm so proud that our AM/FM broadcast reaches 50% of the adult population. Our radio listenership has been rock solid for many years. We have 11 million people on average each week listening to our AM/FM broadcast, rock solid for the past few years. What's really been growing is our digital audience, as I mentioned earlier. So the combination of the two is unparalleled in our market. But you should probably, the takeaway here is that a heritage part of our business, still a huge cash flow part of our business. So it has allowed us to invest in all of our digital organic operations, and incredibly stable and quite different than big city radio. So as you probably know, radio, and I'm not going to go through all the slides in the appendix, but I do encourage you to go through the whole deck. If you're interested in our company, we're posting it to our website as I speak. So I encourage you to go through it. As you probably know, if you follow the radio space, more people listen to AM/FM broadcast radio today than even 10 years ago. That's partly because of population rate growth. But at a headline, radio listenership is solid. But overall, as an industry, radio time spent listening has been declining every year. For Townsquare, time spent listening has not been declining. It's actually been quite stable. And the reason for that is because the backdrop here is these markets are so underserved for information and for their community that they're turning in each day to be knowledgeable and to understand what's going on, and also to hear from our DJs who are really social influencers. Our DJs have credibility. They almost have become de facto the journalists in town, where they are the trusted source. And in these times in America, people are craving trusted sources. And in these communities, I think it's proven, and the data backs it up, the fact that our listenership is, in terms of audience, is stable, and our listenership in terms of time spent listening is stable, which is quite different than the rest of the industry. And that's not because we're better than others. It's because we're in these size markets where others are in the top 50 cities. I mentioned live events. I look forward to live events continuing post-COVID. There obviously haven't happened since last March. My expectation, we planned from a financial planning perspective, no events in 2021. Given the development of vaccines and probably 2 more vaccines coming out in the next 30 days, I could very well see live events returning for our company in August, September, October, and we can, in essence, turn that up within 45 days notice, and we still have a very thin team, but an incredible world-class team in our live events. So know that'll be coming. It's going to, again, be focused on our local markets. It's a very small part of our company, but it's a great strategic part of our company in terms of marketing for ourselves, our radio brands, and our clients, which in these size cities don't see a lot of live events. So it's really almost a community function, but at the same time, one that we can do profitable. So with that, I'm going to open it up to my friend Michael, who I appreciate. I'm glad you are doing well. Congratulations on this conference.
Thanks, Bill, and great presentation. Just a couple of quick questions. We have, obviously, I want to be able to poll for additional questions. We've gotten quite a few already, but if you have a question, just go ahead and press on the lower right-hand corner of your viewer and just press on that little bubble icon and then go ahead and type in your question, and I'll take as many as I possibly can. We do have quite a list of questions here, Bill, so I'm going to kick off with the first one is your Townsquare Interactive. You're right to be pounding your chest on this one. It's an amazing product for you. What's really incredible is the fact that it grew during the second quarter, which I don't know very many businesses that was growing the number of subscribers that you grew, which was pretty incredible because as businesses were shuttering and so forth, you actually saw growth. Can you talk a little bit about maybe the type of customer that you were getting during that period and whether or not that's a different type of customer that's kind of coming out on hopefully on the back end of this COVID situation?
Yeah, so clearly I think COVID put a spotlight on the need for medium and small business to speak directly to their customer base because it was incredibly challenging for every SMB in America. And as governments, particularly if you think back, Michael, back to March and April, there was a lot of uncertainty about phases and government shutdowns and shelter in place. So for a business, one day they didn't know if they'd be open or closed. And then even when they knew they were closed, the ability to speak directly to their customer base and let them know, actually, we're not closed. We're doing takeout. We're doing curbside. We're doing delivery that we've never done before. All of those types of things. It really said, hey, you need a great web presence. You can't rely on Facebook. Facebook is a great social platform, but it's not a great business platform because they, in essence, moderate who sees posts and all of those things. So it did really put a spotlight on the need for SMBs to have the right web presence, be able to monitor their reputation, all of those things. So we did see an influx of new customers, but quite honestly, it wasn't necessarily a different vertical because it's a pretty diversified customer base between retail, HVACs, professional services like lawyers, doctors, dentists. So we have a very diversified base. So it was just simply being able to serve that base. We thought it was the right thing to do. We did give discounts to customers for anywhere from 2 to 3 months who were impacted, who literally were shut down by the government. That's why you saw our revenue grew 10%, which we're very proud of, but it was less than Q1. So as those discounts rolled off in Q3, you saw that growth rate pop back up to 14% and then 16% in Q4. So I think it really speaks to the fact what I said before. We moderate our investment here based on meeting our debt payments, managing our EBITDA, but the addressable market truly is 9 million SMBs. That's not a made-up number. That's a very quantitative number. So it's really just moderating our investment in salespeople to go after that. That's why the growth here, as we said 3 years ago now, is going to be 100 million. At this point, within 2 to 3 years, we're already over an $80 million annual run rate if you look at the run rate at the end of last year. And I'm very confident not only will we achieve the 100 million, but more importantly, that 100 million is just a pit stop on the way to 250 million and 500 million, because today, of that 9 million, the majority sit outside of our radio footprint, and our inside sales team is a world-class team. And we just started, Michael, selling Ignite through this inside sales team during the pandemic. We had so much success with selling our marketing solutions. We said, you know what, let's test selling our advertising solution at Ignite. And we spun up a small team, less than 10 people. And the early indication there is that we're going to have amazing success selling Ignite over the next 5 years over the telephone. And that's quite honestly, for those who aren't familiar with Townsquare Interactive, it started only in our own markets. From 2012 to 2015, we only sold interactive subscriptions in our radio footprint. We then started selling it outside our footprint. And as I noted before, almost 60% today of our client base is outside. So as you noted, based on the question, really proud throughout the pandemic, not only did we grow revenue, but more importantly, that we did a community service. We super served these customers and brought, we have now 11 consecutive quarters of 850 or more net adds in this business, which continued throughout the pandemic. And quite honestly, we had more net adds in 2020 than we ever had in the history of the company. So I think that just speaks to, we're really proud of 2020, but more importantly, what's to come in 21 and 22 is what excites us the most.
Gotcha. And so a couple questions coming in here about just the radio business in general, core advertising. They're asking about the advertising spend and rate trends that you're seeing in Q4 and how that's translating as you go into Q1.
Yeah. So the great news for us, let me give you a backdrop. I know, Michael, you know this from our Q3 call, and we haven't done a Q4 call, but given that we pre-announced, I'm able to share a little more information than maybe some others can. So as you alluded to, I think earlier in the day, in the depths of, March, April, May, broadcast overall, I think for the industry was down over 50%. So for us in April, broadcast was down 52%. In May, it was down 50%. So in Q2, broadcast was down 45%. It then rebounded to 23% decline in Q3. So negative 45, negative 23. That improved to negative 7 in Q4. Even without political, we were sub negative 20. We improved over 10 points from Q3 to Q4 without political. So that improvement continued. To your point about rate, this is an amazing statistic. Some people may say we should have done something different, but we have incredible rate integrity. So in Q4 2020, our average minute rate on broadcast radio was higher than Q4 2019. So the challenge for us was we need more customers, right? A lot of customers based on COVID and the dynamic there were not able to advertise or chose not to advertise on radio. So it was completely a number of clients, not a rate. We, based on the fact that we do reach 50% of the adult population and we are the leading, market brands, we don't discount rate. We think it's very hard to come back from discounting rates. So we held rate and we were down, as I just said, negative 7% in Q4 for broadcast. From an advertising standpoint, we were down only 4% in Q4. And the reason for that is digital actually grew in Q4. And digital grew actually, for the overall for the whole year. So that's the differentiator, having a diversified company with a lot of digital. But as it relates specifically to broadcast, our rate is actually up in Q4 2020 over Q4 2019. And that's really given the strength of our brands. As I mentioned earlier, one of the greatest assets in the company was our sales team. Truly, the biggest differentiator for us is our local on-air content, right? If you think about what's happened in the radio industry over the past 18 months, it's obviously public information that, the larger players in large cities have really gone to a syndicated model and cut back, which I'm sure is the right decision for their assets. For us, we've gone the opposite way. We have just as many DJs today than we had 18 months ago because it's the differentiator in our markets. Our DJs create on-air content, they create online content, and they're super serving these communities. So that's the reason our brands are so strong, and then we could have rate integrity and actually charge more in Q4 2020 than we did in Q4 2019.
Gotcha. You got to be frustrated too about the stock price in a way because the stock doesn't reflect not only a discount to the radio peers, but certainly doesn't reflect the value of your digital assets. And to that point, obviously in 2021, you're not going to have all the noise of the political that the record political dollars that you had this year. So the question that this viewer has is, what is going to be the mix of digital versus non-digital revenues as you go into 2021? And then maybe if you can look out to 2022 and beyond.
Yeah, so for us, clearly, our digital revenue, we ended the year in 2020 at 44% digital revenue. I showed you the stat up from 25% in 2017. So it's not only 44%, but $162 million, with $70 million of that being a subscription business, which is an important component. So what do I think that mix is going to be? Clearly, digital is going to overtake broadcast in a matter of a year to two, just based on digital continues to grow and radio stable for us. So it's not a if question, it's a when question. So when that happens, it's probably sometime between the end of 2021 and sometime during 2022. And not only will it go to 50%, but quite honestly, based on the growth of Townsquare Interactive, we're about to open another location in the back half of 2021 on the West Coast. We have 600 people in Charlotte. As I noted earlier, we started with 3 people in 2012. So we now will have an operation on the West Coast functional by the end of this year. And Ignite is our fastest growing solution in the entire company. So looking at just the digital footprint, how differentiated and unique we are in these size markets, we will be well over 50%. But more importantly than that, that's a nice milestone to celebrate. But at the end of the day, it'll be 50, 60, 70 because broadcast will remain stable. We may do acquisitions because clearly, we are the largest operator of radio stations outside the top 50 market. So that's potential. But looking at organic growth, we'll clearly get to not only 50, but then 60 to 70% being digital over time.
So a couple of questions here. One was to ask about what is your free cash flow conversion rate, EBITDA to free cash flow conversion rate? And then secondly, is the company looking at tuck-in acquisitions? And if so, in what areas, what segments?
Yeah, so on the cash flow standpoint, so I'll go back to 2019 because that was just, I'd say, pre-COVID, we were 102 million in EBITDA. It was a great year, 2019 for us, one of our best years ever. In terms of free cash flow, call it $30 million. At that point, as you know, Michael, we were paying $8 million in a dividend. We suspended the dividend, I should say withdrew the dividend because it's an important distinction during COVID. So we have no plans to reinstate the dividend ever. So last year in 2020, by the time we suspended it, we had $4 million go out the door. But as we look at 2021, in essence, on an annualized basis, we'll save $8 million of that. So it was 102 to call it a 30 million in cash flow. As it relates to acquisitions, the great news for us is we have, not being arrogant, but I think we've demonstrated the ability to birth and grow and create organic digital businesses. Starting with our owned and operated, Amped is a third of, a significant part of our digital revenue. But then with Townsquare Interactive in 2012, and then with Townsquare Ignite in 2015. So I'm very confident that there'll be other digital solutions that we will create based on our engineering team. But that said, if an attractive digital tuck-in comes in our size markets, we would look at that. We're always looking at that. But it's probably more likely based on what we see on the M&A front, our head of M&A, Claire, we see a lot of, particularly mom and pop operators and regional operators in these size markets, particularly with political revenue going away in 2021 and not having a diversified revenue stream and therefore, if not 100% reliant on broadcast, close to it. There's going to be some really attractive acquisition opportunities, I think, now as well as going forward in these size markets. And at the right price point, we are, I think, the natural acquirer. And if people aren't familiar with Townsquare, it was put together originally in 2010 with acquisitions of Region and Gap. And then we grew it through a handful of acquisitions through the years from Cumulus. At one point, we bought about a dozen, and then again, we bought another 15 from Cumulus. We also bought from Millennium and Connoisseur. So I think you'll see our radio footprint grow as well over time because we've clearly proven we can take a business with 90% plus broadcast revenue and diversify it pretty quickly to be a well-rounded media company and media platform to serve all clients in the community with digital really propelling that growth. So I'd say stay tuned.
In your entertainment division, as you kind of ramp up and hopefully get back to normal business, I suppose, it takes a while for that entertainment business to ramp, right? It usually, I think the model was that it's going to take a couple of years to get all the sponsors and the ticket sales and all that to make it a profit, but you lowered the costs significantly in the entertainment division. So can you talk a little bit about, as you see this begin to ramp, let's say it's starting in August, September, or whatever, do you see it as ramping profitably, or do you think that it's going to take a little while before we actually start to see some decent margins in the entertainment sector?
Yeah, I think as we ramp up entertainment, which is our live events sector, 200 live events, heritage live events. So the benefit for us, Michael, is these events literally happen every year. So Taste of Country in Buffalo, a country music show that we do in conjunction with the minor league ballpark there, over 20 years. Literally the day we put the tickets on sale is the day we sell out. We have that with, Frog Fest in Utica. We have that in Casper, Wyoming, Tyler, Texas. So the good thing for us is there's such pent-up demand, I think, A, because of COVID, but also because in these markets, there's not much entertainment from the likes of Live Nation or AAG. They're obviously focused on bigger markets. So to your question, we can get up and running really within 45 days. So once we feel a community is COVID safe, at the point where mass gatherings of people can occur, we can say 45 days later, not only are we putting on an event, but it will be profitable because we have the built-in customer base to sell tickets, and we also have the built-in sponsorship because they're literally, for the most part, already connected to our radio brands and our radio stations. So once we hit go, literally, in essence, the beauty of this business, it's small. Again, it's less than 20 million in revenue in 2019, 20% profit margin, but the beauty of it is it's really great branding for local clients, really great branding for our radio station, and it'll go back to exactly the way it was before. So the 20% profit margins day one, and we'll ramp back up. And then I think in 2022, 23, there's potential growth there, but I think it's, low double digits. I wouldn't expect this business to go from 20 million to 40 million, but I could see it going from 20 to 24 to 26.
Okay, so we have about 40 seconds left. I want to try to get one more question in here. And on Townsquare Interactive, does it make sense to spin it off, sell it, or to unlock the inherent value in Townsquare Interactive?
Yeah, it's a great question. Quite honestly, the reality is it's so integrated today. As I said, the customer service, the sales, actually all the sales that happen in our local markets actually are sold through the Charlotte Townsquare Interactive team. Our local AEs actually refer to this expert sales team. So it's really one ecosystem. The other thing I would highlight is, as I mentioned earlier, we have I want to be careful about how I parse this, but we are now selling Ignite through roughly an 8-person sales team in Charlotte. And I expect that to continue to roll throughout these 200 salespeople over the next 18 months. And today we're at almost $500,000 in monthly billing. So call that $6 million annual revenue with Townsquare Ignite being sold into non-Townsquare radio markets. So why would I want to separate that when they're so ingrained? And the other thing is we have other things in our pipeline that obviously I haven't talked about. But as I mentioned, we have a world-class technology and engineering team, and they birthed our content management system. They birthed our Townsquare Interactive. They birthed our Townsquare Ignite. And they've got a lot of great things cooking that we're going to leverage our inside sales team to sell throughout America in smaller cities. But they're also completely ingrained in not only selling Townsquare Interactive for our local radio markets, they actually help train our sales team in our local markets. So from afar, it may look like, hey, we should just separate this. Wix is at a 13 times revenue multiple. Let's sell this off. It's my job as the CEO to show the underlying value, unlock that value, because there's actually a lot more value with it combined. It's just my job for more people to understand that, and I'm confident they will as we go throughout 2021 and 2022. So Michael, thank you for all the questions, and thank you for the opportunity to be at the conference.
Thank you. That's all we have time for. Thanks, Bill. Greatly appreciate it.